Last 4 years, China was doing badly. We were beneficiary of that.
Correct.
When China cycle reversed, we were for the first party which is affected. Now, currency market is far bigger market and most sensitive market. A lot of people ignore. And if FI selling started, what they own all the large caps.
Correct.
So we got affected in the large cap.
But that's precisely the thesis that that Naren advances, where he says that now if the flow has to come back, it will come back into large caps rather than mid.
But what is very important to understand that if some investor has 5-10 years horizon, he should definitely put money in small cap. India has done very well. So why we should be remain negative? India is buy on dips. Maybe March end, typically because the quarter end, year end phenomena, every year we see that unwinding of position. Maybe by 15th April, you might see a reversal in the cycle.
Sandeep, so the big change that you're making at this point of time is from risk off back to risk on. I think we spoke to you exactly a year ago.
Yeah.
That time you had made another big switch to risk off. You had taken big exposures to two large corporate groups, and that hasn't worked out as well as you had thought. So can you tell us first what happened in the past year, and now why are you switching back to risk on?
So Neil, we always say we are in the business of risk management. Returns are byproduct. That's a thesis we work. So entire focus of the organization is about risk. Okay. See, from a risk management perspective, you have to be ahead of the curve. The problem happens with most of the people react when event is over or is playing out. Okay. Then you don't get that opportunity to play it properly. Okay. But what happens sometimes when if you're early in a call and whatever reason call is not materialized, people tend to make a fun, see this failed, or like how people make fun of mid department. Okay. Say today, like in Bombay, we always say between 10th June to 10th September is the monsoon season. What we do in monsoon season, we take precaution.
Right.
We carry umbrella. Okay. We carry a bottle of water. We use loo also so that you don't get stuck in traffic. These are very things which we follow.
Basic precaution.
Now, in that period, we know it's a monsoon period. Sometime Met Department will talk about orange alert or red alert, and it's a very common phenomenon. Today, orange alert definitely is going to be a dry day. Okay. Now, Met Department is making these calls or forecasting based on certain pressure points or data, whatever scientifically they look at. Okay. Similarly, similar thesis work. Now, if you recollect, we were very early in July 2024 to talk about mild risk off. In September, October, it will become a major risk off, but it was a mild risk. Now, if I go back and look at the history, at that point in time, we said India macro situation is deteriorating. Not a single economist or the strategist had downgraded India. Okay. And it was an upgrade cycle. People were talking about upgrade for India and other things. And by December, people have changed their view and now downgrades have begun. Okay. Every economist is jumping and thumping the table, India is peaked out and all those things. So I'm not making fun of them. What I'm trying to make a perspective, in a game of risk management, you have to be early. Not necessary that everything will play out the way you visualize. Since we are slave of data, okay, for me, data is everything. Okay, and if data is giving an indication, okay, this is something is changing, what I said do as a risk manager, I will reassess. I will change my portfolio. I will not fear that whether this call will go right or wrong. Okay, this business is all about probability.
Sure.
If data is showcasing that the probability of this event playing out is there, then we will take precaution. Let's take example July very early. What we said in July, an event risk round the corner, and we talked about currency risk. It played out beautifully. Okay. Now, how many people forecasted an event risk in July when in front of you that USD JPY yen appreciation happened? The carry trade unwinding happened and global market corrected 20%. We also were down 8-9% because India liquidity was in a good shape. Okay, and India liquidity was there. We corrected, but we came back and we came with a vengeance because domestic flow was very, very high. Okay, now, but our analysis was not wrong. Then we talked about this volatility can last. We extended it to till Trump election. We say it's a very big global event. And right from September, August, what we started talking about, much before the Trump, August onward, we are saying that DXY is the perceived risk.
Sure.
Okay. We were early to talk about DXY, but it was 100, 101. We say the perceived risk is dollar index. Nothing happened actually. Marginally up and marginally down. By September, you see dollar started rising. Dollar started rallying not only against rupee, across all the global currency, including EM and DM.
Sure.
Okay. On by 5th November, it was very visible that trend got further momentum. Now, currency market is far bigger market and most sensitive market. A lot of people ignore. Currency market has since arrival of Trump much earlier than any market. That's the reason September onwards the trend was visible. Okay, since we are student of or market implied analytic, we work reverse calculate. What market is employing, we should reverse calculate and see. And that's the way we do our predictive analytic thesis. Market implied analytics is a very important component. The entire thesis of predictive analytics is based. We are not astrologer to tell you, okay, this date, this week. We are seeing the data and then we took a conscious call. It played out very well. Okay. Now, what is very important to understand that we took that conscious call. What you do in risk off period, you move from high beta to low beta, illiquid to liquid, and mid and small to large cap or mega large cap. This was our conscious call.
Okay.
It played well. Come September, October, okay, when China unknown risk hit us. Okay, why I call it unknown risk? The easing which they do, it was very sizable liquidity infusion which did, and money shifted quickly to China. See, we all are a part of a emerging market basket. Last 4 years, China was doing badly. We were beneficiary of that.
Correct.
When China cycle reversed, we were for the first party which is affected. I still expect China to still do very well. Maybe in recent times also they are doing much better than India. So it's a very tactical shift which money happens. See, all hedges, prop account, they don't wait. It's a very sizable position which they have in India. They shifted. So what this, and if FI selling started, what they own all the large caps.
Correct.
So we got affected in the large cap. Now, if you were to say that we don't have a God status to say that to unknown risk, nobody. For lot many people, dollar index was unknown risk. Currency movement was unknown risk. For us, it was known risk because if something is which kind can predict through analytics, is a known risk. Dollar, like perceived risk is between unknown and known. Okay, so we said even that perceived risk of dollar is now known risk. Okay, what is unknown risk now also, if I look at it in today's context, what China will do next is unknown. Trump is already known. Okay, the changes which Trump is going to make, okay, or noise which is there, or narrative or noise which is there, is a known risk now. The perceived risk is about left in the China, what China, how they will react. Nobody has visualized what they did. And that's the reason all stimulus they put on hold and says post-term policy. So when we talk about risk assessment, that's the one thesis we follow. Now look at end November, we said that it's a mild. Okay. And again, we are saying it's still a mild risk because I'm a slave of data. Our risk amide parameter deteriorated. They have already covered 60% of the journey. Okay. Which means last 40% journey is left. Now, as a student of markets, okay, and if we very proudly say on a timing perspective, see, I have learned one lesson in my life. Nobody has sold at the top. If you sell 30% also below the top, you should be happy. Okay, and what phrase we used to say was, you allow somebody else to make money, then only you will get exit. If somebody is giving you exit and he doesn't make money, then you don't get exit. So you should be happy if price moves 30% after that. Okay, now somebody said 30% is very big number. Theoretically, yes, but you have already made significant gain, and what last 30% also you want to capture, then you should have a God status to say this top I will capture. Some people are lucky on individual capacity to get that top. As an institution, when you have a sizable trade, I will leave 30% on the table. Similarly, when we're talking about now, look at the panic on the street. Everybody is saying sell as mid, small, get out, stop
So,
SIP,
Sandeep,
all those things.
let me
Yeah.
come to that because it leads on from this thesis. Now, you're saying that large caps bore the brunt of FII selling and money going to China. You also,
Yeah.
your fund suffered. But that's precisely the thesis that that Naren advances, where he says that now if the flow has to come back, it will come back into large caps rather than mid and
So we are also very early. We right from July we are saying shift to large and mega large cap. We were the first how to talk about large and mega large. Okay, but see, understand when we look at total asset allocation. Okay, small and mid are part of it. Right from February onwards and March last year, when this, if you recollect, say we talked about the risk in the mid and small, disclose the liquidity aspect. Since then, what we are saying, please assess your risk appetite, reassess your risk appetite, reassess your investment horizon. At the peak of the cycle, every investor has large risk appetite. Everybody has long-term vision. That's a open fact.
True.
3 months, 1 or 2 quarter correction, that risk appetite he never had actually. Okay, the tolerance level of a person was not there. That's the reason I always say, please analyze your behavior, how you reacted in 2000, what you did in 2008, what you did in 2018, how you managed 2020. When you go back and analyze your own behavior, you have answered what is your risk appetite. Otherwise, it become a theoretical and academic exercise. Neither the fund manager understand the risk appetite of investor, nor the distributor understand. Is a particular individual way of reacting. Some people get very excited, okay, at the top and the bottom of the cycle, okay, and we are extremely nervous at the bottom of the cycle, and we as a behavior house capture these data points, okay. So when we say that now we have covered 60% of journey, so what we are doing, we are actually buyer in a small cap, okay. When whole world is advising get out of the small cap, we were early to advise. Now we are selective buyer, because if we believe India is a long term story, okay, India is a secular growth story and a structure bull run. Okay. Now somebody can say that this is all thesis long term, but ultimately we have to work on some numbers. Na? If we say that India perception has changed, we say this decade belongs to us, maybe our century belongs to us. India is not about absolute number. I always harp. Look at absolute number, look at relative number. Relative numbers are more important. India economy is in a sweet spot relative to the world. Maybe US has done better than India in this current context, and maybe next 3-4 years also they might do better. I'm not debating that part, but it's a relative opportunity as compared to emerging market. India has done very well. So why we should be remain negative? India is buy on dips.
So Sandeep, just to understand this argument a bit better, you don't agree with Naren's assessment that FII buying will come in large caps rather than...
No, I completely agree. We were early to say that.
Okay.
But after falling meaningful, if whether it makes sense for me now to sell small cap and move to large cap, that's the only debate I have. We were early to do that, and we underperformed also. That's also a fact. My only point is that when cycle is, see, 30% top you have to leave and 30% bottom you don't get it. So I think this time is right where, and if you ask me purely on analytics, forget somebody's individual view and my individual view. We don't give damn any weightage to anybody's view. I don't give weightage to my own views also, because we are slave of data. So no point bringing somebody's view or my views. It doesn't matter. Ultimately is run by analytics only. What we are trying to showcase is that if risk appetite parameters are collapsing and they have covered large part of the journey, okay, and I'm saying 60%, whatever mathematical analysis we do, 60% is already the journey is completed. Last 40% is left. Now last 40%, should I wait for the last 4% is left? Then I will do it. I may not get the size. We already have a very large holding of large and mega large. Gradually we are shifting wherever we are getting. I'm not saying that is over. Now, if you look at from behavior, the entire buy on dip thesis has gone out is sell on rallies. Everybody wants to sell on rallies. So, which means people who has made up their mind to exit, they will move out. So every rally they will exit, and that's the reason I say it might take a month or two more also. Okay, maybe March end. Typically, because the quarter end, year end phenomena, every year we see that unwinding of position appear. Maybe by 15th April, you might see a reversal in the cycle. And again, I'm not forming opinion right now. This what my data is suggesting at this point of time. As it unfold, we will take that conscious call. But what is very important to understand that if some investor has 5-10 years horizon, he should definitely put money in small cap. You go and check the history. 3 years, 5 years, 10 years, mid and small has outperformed. Okay. So I'm not worried about 1 year horizon. Somebody has 10-year horizon, he or she should put money. If somebody has only 1 year horizon, please put money in. Not only large, I will say mega large.
But Sandeep, your view is not so much, if I understand this correctly, not so much based on the valuations of small cap, which arguably are richer than large caps, or the share, the pie of the share in the overall market pie that small caps have, which is arguably larger than historically it used to be. But rather, your argument is based on liquidity flows, right? It's based on, I mean, you're not taking...
So I'll answer that.
Yeah.
See, we are not slave of just valuation analytics. Okay, we are slave of combination. Okay, so valuation analytics in our VRT framework has weightage 1/3 only.
Okay.
2/3 is beyond valuation. 2/3 is 1/3 is liquidity analytics, 1/3 is risk appetite. Because liquidity and sentiments are equally important aspect. Okay. Now, if you look at, let's talk about valuation. Right from 2020 to India is expensive. Okay, is more than 2 years. Forget last 2 September, October. If you forget last 4-5 months, okay, then India was expensive. every strategist downgraded India saying that it's very expensive. What happened? Market never corrected. So the point which I'm trying to say, if you look purely on valuation, then it's the biggest blunder. You don't get all answers. Okay. If that was the approach, is valuation expensive, then somebody should have sold in 2022 and maybe could have missed 50% rally in the market. You look at why we turn negative. Let's understand valuation. So India valuations are expensive and remain expensive for next 3 decades. That is our view. Purely based on lot of market people do forecasting on earnings, we do forecasting on the valuation multiple.
Because just to add some context here, Ashwath Damodaran says that we are the most expensive market in the world.
Fair point. I'm saying when cycle changes, India is expensive and remain expensive for 3 decades. That's our view, because the India perception data point which we track and which we proprietary knowledge we have built, we believe that will remain expensive for a longer term perspective. So that part is very clear that you will not get cheap. Yes, some sector, so you can say large cap are more attractive than small cap. I agree. Mega large cap even are more attractive than the large also, which is also I agree. So that, but it is a balancing act you have to do. You can't say this is the only thing, my entire thesis. We run complex multivariance model. We give weightage on multiple data points. So valuation expensive, remain expensive. Now come in July, what happened? Risk appetite started collapsing. There's a second dimension of our VLRT framework got affected. We turned cautious. Come September, October, liquidity analytics also collapsed. So all 3 parameters, it impacted. Now what is, we are still not saying the valuation. Okay, and I'm talking about not small or mid, I'm not getting into that debate. I'm talking about India as a whole. Okay. When I look at asset allocation approach, I will keep some small and mid cap in my basket. And I will keep more small cap in basket because versus mid cap, because mid caps are actually more expensive. Because of the definition between 100 to 150 stocks are mid cap. And you have limited choice, and hence they by default they become more expensive. But small cap range is much larger. There are many opportunity available in small cap and nano caps which can be multi-bagger. But are we saying skew your portfolio toward that? No, we till July we were running very skewed portfolio towards mid and small. And you have seen our portfolio concentration in mid and small has come down drastically. And we suffered also because mid and small continued their rally till December itself. Okay. Now what is very important is now valuation is same, let's say even slightly corrected. So, but it's still not corrected up to the expectation of the most of the analysts.
Sure.
Now coming to the second point, risk appetite which has collapsed. I think we are in the fag end of that. Now mathematically, when it happens, then we'll take a conscious call. But we have started nibbling and looking for liquidity parameter has still not changed. India liquidity is still, we are seeing outflow, and liquidity analytics still not in our favor. Okay. And if I have to look at even from the good liquidity perspective, India good liquidity has actually declined, which means India productivity, efficiency of free cash flow generation is actually slightly affected in that sense. But market is always 1 quarter to 2 quarters ahead. I always believe market is 2 quarters ahead of any upgrades or downgrades of the earnings. July we spotted, we were 2 quarters ahead because we are slave of data. Similarly, I will say we are also early in identifying the reversal of the trend. So we are saying that it's a mild risk on, which means selective opportunity has come. And it's not like we are very gung-ho and small and mid all out. No, we are selectively buying. But our portfolio still is skewed towards actually mega large cap.
Sandeep, the other bet that you had taken at the start of last year was on conglomerates.
Yeah.
And they are still a large part of your portfolio. So as you shift slightly towards small caps, will that reduce, or what is your view?
See, as of now, yes, it's not played out up to that extent what we felt, and rather it has got affected. Okay, that's a fact of life. Okay, now we also don't take this call for 6 months perspective. Like if you recollect our ITC call, okay, let's understand what we do. We buy and sell stocks when they are in the extreme inflection points, extreme hated zone or extreme admired territory. Okay. So when you get those phenomena, we should start participating. When you bought ITC, everybody, felt it's gone case. People used to make jokes about, or, cartoons over there.
Yeah.
Okay. Now, we made good amount of money. We felt that if you look at the energy basket, okay, let's understand in our portfolio, it's not about when mutual fund managers sell, everybody talks about long term. Okay. In our portfolio, everything is not long term because we believe everybody has short term, medium term needs also. So our portfolio is balanced, okay, well diversified from a risk perspective, high risk, medium, low risk, as well as the duration also. Okay. The investment horizon also. So we have stock selection, we have a decadal view, long term view, medium term, short term, and even near term. So some of the basket which you are referring is a part of our energy basket. We think energy as a thesis will last till at least for a decade. So we are looking at till 2032, 33 zone where we think energy basket remain. And the reason our portfolio is skewed towards energy basket. It's not only one or two names you're looking at. If you look at total my basket, it is skewed towards energy. When we're talking about entire renewable space, we are think we are well positioned to optimize that opportunity when junks are traded at absurd valuation, when large conglomerate should not get that valuation, when they are talking about some 100 times of the capacity which industry, small companies has built. So I think I will bet on a larger names rather betting on the smaller names.
Sure, Sandeep. But that particular bet goes largely beyond energy as well, because that conglomerate has so many.
Yeah, it's a combination. So we are bullish on telecom, we are bullish on financial services, on particularly on the digital side. We are equally bullish on retail as a thing. We were very early to identify consumption theme. Our portfolio is also skewed towards consumption now. And we have been saying for a while, it did very well. It corrected also. I'm not debating that part. But we think now in the budget, what came out is a very clear visible that consumption is a thesis which will play out. So we are light on capital goods. We are light on many so-called last 2 years or 3 years extraordinary admired territory stocks. We don't own those names.
Sandeep, so sectorally, apart from consumption, what else are you bullish on and what else do you not like?
See, we have built a lot of exposure in the hotel as a sector, irrespective of the positive mentioning happen in the budget also. We think that's the one area which is going to pick up. And if you recollect, I always give this example. Many years back, we were very early to spot reality as a theme. Okay, I myself was involved in the multiple IPOs as an investment banker in the past. So we saw how that segment which never used to believe, people used to have a mistrust for realities. Cash transactions are very large. General perception was pretty bad about builders. And now how important segment it has become. Reality is a large space for us. Okay, when one of the company came with a large cap and is part of the Nifty also some point in time. What is very important, I think something similar will happen for the hotels. Okay, you've seen that many companies are getting listed. This is a new space, and post-COVID, hotels' importance has moved up. And I think the something mindset has changed post-COVID. People want to spend time. They want to really enjoy life, and they want to stay in a better hygienic thing. Ambience make a lot of difference. And you look at it was today the festive season happened or the so many destination wedding I have even attended. You don't get space in the hotel. Okay, there's one area when entire market, if you look in the despite festival season numbers were not good for most of the industry, but hotel industry was very good. I think that's the one big bet we have taken in our as overall portfolio. So we have a very large exposure in the hotel space now.
And anything you don't like?
See, as a house, I tell you, we don't have a philosophy of love or hate for anything. We are a pure opportunist. Okay. Today I say I don't like this thing. Maybe down the in 2 months, if something looks good, I will be buyer in that. So I generally don't venture into some statements like this is something which we never touch. This is something we don't like. This is something will never happen. I think we are very pragmatic people. So we'll never make some statement like this. We are pure opportunity. If I get better risk adjusted opportunity, I will play. We still remain underweight on large banking names. We think global deterioration in terms of multiple happening. We still remain very, I'll not say negative, we think many admired territory names, which I don't want to stop and talk about individual names. They have done an extremely good job in terms of return. I think they are grossly overrun. Extraordinary stretch valuations. That's the area we are very cautious. We are equally cautious on the IPO. I have been saying for last many months now. We are seeing some amount of hype getting built. It's not like we have not participated. We have participated, but we are very selective. Okay. So we are very optimistic on large infra as a thesis. Okay. India centric. Again, select pharma, not all pharma, select pharma opportunity, hotels is opportunity, energy is opportunity, consumption we have added, okay, and we will may increase our exposure. And if something corrects sharply, even in the cap good space, okay, because that's still we are constructive on materials also in a small way. We have a lot of many exposure in that area. I think that's the area like it.
Okay. Sandeep, it's been about 6 or 8 months since there was a SEBI inquiry.
Yeah.
Any developments on that front?
See, as a house, we always say we don't comment on regulatory aspect, okay? And if anything happens, I think we are happy to share. We are very transparent how we are the first to share Okay, I don't think that practice is there in the industry to share anything. I don't want to get into names. People don't share. We as a house will always share because we believe in transparency. If you really look at our fact sheet is released on the first day of the month. Whether it's a holiday also, now we started releasing the budget date was a holiday, we release our fact sheet. Our portfolio come first. We are very transparent house. Say we talked about the liquidity analytics for two scheme, mid and small, we give for entire portfolio. Say we talks about concentration risk, we give concentration of our investors in our portfolio. If you look at our fact sheet, it's like a wealth report. A lot of wealth manager make complex report. Our report is available. So we are emerged as a wealth manager for masses. We are very transparent. We give every underweight, overweight, every aspect we cover. If you read our fact sheet, very, very detailed. So it showcases about transparency. We disclose our hiring. We showcase about our people. We actually showcase our views also. Okay, we communicate very well. We articulate what we want to convey in very transparent manner. Even we are ahead of the call, we will talk about it. Okay, it's not about the we will only communicate when something is wrong or something is not working. No, it's a continuous process. See, communication is a very important medium and we strongly believe in that.
Sure. Just one last thing. Since then, have you seen a moderation in flows coming into Quant?
Not really. Okay, if you really look at only for first 2 or 3 weeks, we saw some amount of it. To be precise, only 2 weeks we saw some redemption after that episode. After that, stabilize. Rather, we cross actually 1 lakh crore after that episode. Okay, but if you really look at our fund flow has declined a bit. We like a lot of people say, oh, we are facing redemption today. Only we got cause or redemption in Quant and some other houses. No, it's absolutely not correct. We are not getting any redemption. In fact, rather we have inflows. Okay, but what is very important to note, yes, our inflows has moderated. Two reasons for it. We ourselves say is a risk off period. We, if somebody comes and asks me, is a risk off period, do you put very sizable money? I said, you do SIP, don't put lump sum right now. Okay. So we are also not going all out and marketing ourselves, because I always say as a house, we don't want to be seen as a AUM gatherer only. Okay. If I generate better risk adjusted opportunity for investors, therefore, let's say how in September 2023, we made a big call, say risk on environment. Okay. And we aggressively pushed. We asked people to put money because that was a risk on. And if I see that opportunity again, it's better to take money when you see a easy phase for the market, so that people should make money. People will give you money. We are very confident. Look at the base we have. Very sizable 90 lakh retail investor folio we have built. So that's the commitment and trust of people which we have. So we don't want to just chase just for the sake of AUM. We think when the opportunity will come, we will be equally aggressive in communicating that view. The time is right to rebuild your exposure in some of these things. I think we're not very far away from that.
Great, Sandeep. Thank you so much for your time.
Yeah, thanks a lot.